It's 8 minutes after 7 to look at the markets. We're joined on the line by Hussein Sayed, who's a chief market strategist at FXTM, and also in studio is Martin Strauss, who's a director at ShareNet Johannesburg. Hussein, I'm going to start off with you. How did we kick off the week on the markets front?
Hey, good morning. Pleasure to be with you. You know, this week was supposed to be kind of muted trading week ahead of the Thanksgiving holidays in the U.S., but unfortunately it turned out to be a massive sell-off in equity markets. And again, these kind of momentum stocks, the tech sector, have been the major driver for this sell-off. We look at Apple, the Facebooks. So, you know, the FANGs in general has been driving this sell-off, and all of these stocks now are in a bear territory. So I think what we need now is a kind of a solid shift in fundamentals to revive confidence. There's so many of bad news now in the markets, and that's what we're seeing driving not just the U.S., but the global markets in general.
When you look at news flow out of Brexit, I mean, is that impacting risk appetite and how investors are behaving towards the dollar?
I mean, to some extent, yes, it is impacting, but so far it's not impacting the global assets. We can see most of the assets that have been impacted are mainly these kind of, whether it is stocks or fixed income that are heavily exposed to the UK economy. So, for example, the real estate sector, the housing, these stocks have been plummeting heavily since the past week. We can see also some banks like Lloyd, Barclays, RBS. These kind of stocks have also been impacted heavily. But so far, you know, the picture is not clear yet. We don't know what will be happening until March. But what we can see is volatility. This kind of Brexit story is just causing volatility to spike. We have seen this in implied volatility in the pound. It surged to highest levels since the Brexit vote. So, yeah. It does worry investors, but so far the impact has been mainly on UK exposed assets.
All right. Hussein, back to you. Key pieces of news that you're going to be keeping an eye on for the rest of the week.
So I think what I'll be looking for now is, again, Fed commentary. What you were talking about, the dollar has been falling, and yes, it has been falling, but this is due to Fed commentary, and markets are just waiting for a signal. So, for example, if you look at the Fed fund futures, now the markets are just pricing in 3 rate hikes until January 2020. So they brought it one by, they dragged it by 25 basis points. And also, if you look at the fixed income markets, it has been declining with the 10 years now trading at 3.06%. So they do believe that the Fed could be slowing down the tightening cycle, but we also need more news from the trade dispute between the U.S. and China. I think this is what the markets want to restore confidence back. Until we see a change of these two fundamentals, I think the markets could continue to suffer for the next couple of days and weeks.
Hussein, thank you so much for your time this morning. That's Hussein Sayed, who is the chief market strategist at FXTM. Of course, we still have Martin Strauss from ShareNet Johannesburg with us in studio.